Hi everyone, it's Trout here with your Twin Cities Housing Market Report for May 2023. Welcome finally to spring here in the Twin Cities. Boy, that was a long slug of a winter, right? I'm so happy to see some green grass and some tulips blooming. We are seeing some signs of spring in the housing market too, although not as much as we'd hoped. I'm going to kind of quickly run through the numbers for April and stick around to the second half of this video because I want to put some of these market trends into a larger historical context for you. Let's dive in. I will start with new listings. The number of new homes that came on the market in April in the 7-county metro area was up a little bit from March, but still down by 27% from last April. That drop was even greater for existing homes. The number of new listings of existing homes fell by 32% year over year. The only place we did see a little increase in new listings was in new construction homes. New construction home listings rose by 15%, but the actual numerical increase was pretty small, from 631 listings to 727. That is kind of a drop in the proverbial bucket. Now, the total number of new homes for sale was also down, but not by quite as much. The total number of new homes for sale fell by just 3.3%, but that's probably because we've been in this squeaky tight market for a while now and inventory has been depressed for months. Once you're low, it's pretty hard to get much lower. So, month supply. I want to just say again that this is a measure that indicates how long it would take to sell all the homes that are currently on the market if no new homes were to come to market. And this is basically gauged in months. So the month supply did jump up a little bit in April from 1 to 1.5 months, but really that seems to be due pretty much to that bump in new construction. When we look at existing homes, it's pretty flat at 1 month supply. I'm going to talk more about this in the second half of the video. Now let's talk about median days on market. So median days on market is up compared to last year from 7 to 16 days, and that's where you can really see the impact of rising interest rates. You can also see it in home prices. The median home price in the 7-county metro was $370 in April, down from $375 last year. Now, sellers are back to getting 100% of their asking price on average, however, which had dropped down to about 97% in January. But that might be more of a reflection of seasonal time and interest rates. So, no surprise, the number of closed sales was also down in April compared to last April, and that's a reflection of the low inventory again. So lastly, I want to take a look at interest rates. The Federal Reserve raised its interest rate, called the federal funds rate, last week by 1/4 point. It's their 10th rate this year. Now that pushed mortgage rates up slightly, but the average rate on a 30-year fixed loan was at 6.65% this morning, up from about 5.74% at this time last year. But it's down from the peak of 7.2% in October. So that's a little bit of good news. So as you can see, the housing market continues to struggle with both low inventory and high interest rates. But I want to take a minute this month just to put these things into a larger context. This is really especially important for those folks who are considering buying or selling but are waiting for market conditions to improve. In the past 5 years, the highest measure of month supply was in September of 2018, when supply was at 2.6 months. That is still well below what we would consider a balanced market, which is between 4 and 6 months of supply. So this inventory shortage that's been going on for a long time now, it's not going to go away anytime soon. In fact, the last time we had anything resembling a balanced market in the Twin Cities metro was in September of 2014, when supply was at 4.4 months. Now that is just barely what we would consider a balanced market, where the number of buyers and sellers is relatively even. When you look at these historical numbers, you can see that the kind of market shift it would require to bring a slew of new homes to market might be years away, barring, of course, some kind of larger economic catastrophe. Say, for example, if Congress can't get their act together and agree to raise the debt ceiling. Now, I also know a lot of folks are waiting to buy or even sell until interest rates go down again, especially for people who purchased or refinanced during 2020 or 2021 when interest rates were in the threes. But if you look at the historical numbers, interest rates on a 30-year fixed rate mortgage are pretty typical compared to the last 30 years. Interest rates on a 30-year fixed mortgage were 7.4% in May of 1993 and 7.63% in May of 1973. So I guess my question for you is, if you are waiting for the market to change and are putting your future plans on hold, how long are you willing to wait? All right, that's it for me. I will see you next month in June for a look at the May housing numbers. Thank you so much for watching. If you have questions, please reach out. And by all means, hit that subscribe button if you want to see more of my videos on buying or selling in the Twin Cities metropolitan area.